Hey everyone, Codex here. Today what we're gonna do is take a look at Elrond's native token, Egld, and its current price action so we can understand if this downtrend that we have been experiencing for some time now will continue as we head into March, or if some relief rally is ahead of us. So if that's something you are interested in and you find these videos helpful, make sure to subscribe to the channel, like this video, and also leave a comment, as every bit of support helps us moving forward. And let's get into this one. So since January's bottom are about 110 bucks, it seems like Elrond hasn't been doing much. And look, we did in fact see a short-term rise in here all the way up to 270 bucks on Binance. On KuCoin it was 230, which was impressive to say the least. However, the overall momentum hasn't really changed, and EGLD is back to the starting point where it has been going sideways for some time now. Now, Egld is currently stuck in this high volume node at about 130 to 140 US dollars, and it seems like there is a lot of confusion around our price because, let's be honest, for the last 3 months Egld has been doing nothing but dropping lower, and as of the time we are recording this video, the price is down about 75% from our all-time high, which is worrying. And a lot of people had high hopes in here when our price trended up, and they thought that the drop was over and that our accumulation phase has ended. But unfortunately, EGLD is still struggling, and if it can't manage to hold this current level, then the next price target to look out for will be at about 70 to 80 bucks, as it's the next high volume node where there is a lot of retail interest. This zone has previously been an accumulation phase, so going to this 70 to $80 level if we drop is very likely to happen. If we take a look at the stochastic RSI now, we can see that we have in fact a bullish cross right here between the orange and blue line. However, you have to keep in mind that the orange line is still below the level of 20, which means that we don't have a confirmation yet. So we still need to wait for both lines to rise a bit higher before making conclusions. Also, if we take a look at the Phoenix ascending indicator, which is another momentum indicator, we can see that we also have a bullish cross right here between the ascending green line and the red RSI, and we do in fact have an upward energy. The upward energy is, by the way, this gray shape, but you have to keep in mind that as long as the red RSI and the blue LSMA are below this mid-yellow line, the overall momentum is bearish. We still have a downward pressure, technically speaking. Looking here, for example, at the end of January, after having a bullish cross, the price didn't really move up. We just kept having some sideways movement for some time until the blue LSMA and red RSI, both lines of course, went above the level of 50, which triggered calls for an upward pressure. So for now, until these two lines start going up, the downward pressure remains dominant. So worst case scenario for me would be to go to lower levels, and best case scenario for now to keep moving sideways in the current high volume node, so in the current range. And this is why the probability of us falling down to the next high volume node, as I said, at about 70 to 80 bucks remains very, very possible. And this is also another reason why gradually buying as we head to lower levels is your best bet in crypto. This is simply why I will never agree with the idea of buying everything at once, because let's say, for example, you can buy everything today, you can buy with the whole amount of your stable coins, and we head to the upside just after you buy and we never come back in here. But there is also a high chance of us heading much, much lower. And if you jump in today, for example, and use every single penny you have to buy, then you will be out of fiat if things get worse, which is bad. If we move on to the 2 days time frame, for example, just to have an idea on what's happening on a bigger time frame, you can also see that all three lines are still going down and they are below the level of 50, and this is bearish. Look, the green line is slowly starting to head up, but it can change its trajectory at any given time because of how low the red RSI is. And if the green line falls down to this orange line, then we will be going to this orange band on the BB bands, which is currently at roughly 103 bucks. Look, when I say that we have a bearish momentum, you have to keep in mind that seeing a short-term rise is very possible. Having a daily or a 2 days green candle can happen, it's possible, but a bearish momentum is simply to say that although we might go up in the short term, the risk of us trending down remains very, very high. So this is my opinion, guys. This is what our indicators are showing. Thanks for sticking by till the end. Don't forget to leave the video a thumbs up. Make sure to subscribe to the channel. Leave a comment if you feel comfortable doing so. Share the video with your friends. Have a nice day and peace.